Good morning and welcome to a new week's Join the Dots. Now, it's ever so difficult sometimes to try and translate very, very serious, heavy macro problems into a 10-15 minute video. And I've spent hours trying to get this right this morning because I want to get this across to you. Please understand the difference between narrative and truth, because if you don't, you're never ever going to see the truth. Okay? Do you remember about 2 or 3 months ago, the dollar was absolutely in free fall, and everyone said the dollar's going to fall apart. Buy gold, buy silver, buy anything, buy yen, buy euros, buy anything. And I said, no, the dollar's not going to fall apart. No, it won't. The dollar will come back. And here we are, 3 months later. And just to give you some of the economies in the world, which are quite important. South Korea, down 4% against the dollar. Japan, down 5% against the dollar. Rupee, down 5% against the dollar. 3, what you would think was strong, stable economies. Japan, South Korea, India. No, the dollar is not finished. Okay, that's narrative. That's narrative. Okay, it helps people make money because they speculate against it. They shout it, they print it, they scream it. No, not happening. No, people don't want the dollar naturally, but that's why we're on our path, isn't it, of gold, silver and crypto. But the point is that the economies of the world are weakening faster than the American economy. And the American economy is weakening. Don't get me wrong. But it's all relative. And the dollar was sold off massively. And now it's coming back. But people don't want to hold the dollar. So if they want to be in a dollar-based asset that isn't the dollar or US treasuries, they'll buy gold and silver, won't they? And that's what's been happening. Now I'm trying to run through five things here in these 15 minutes. Very difficult, but let's try. Okay, so 7 days ago, Jeff Snyder at the Eurodollar University said there was a global currency crisis that no one is talking about. He's absolutely right. There is a global crisis. No one is talking about it because it's not popular, but it is true. So the narrative is nothing. The truth is there's a global currency crisis developing, okay? And it's based not on speculation, which was the dollar's downfall. A lot of that was speculation, okay? Now everything is based on fundamentals, and that's why the other currencies are now weakening, because their fundamentals are fundamentally worse. Okay, I'm not advocating the dollar, don't get me wrong. Don't go down a binary path of, oh, if he says this, he means that. No, I'm telling you, there's a currency crisis out there. And it's showing in very many ways now. Now, that's the first link I'll give you to the global currency crisis no one is talking about. Then I'll give you a link to Jeff's one from this morning, which is, guess what? China's property collapse. I've told you time and time and time and time, and I could keep going on for 10 minutes again. There's a property collapse in China which is absolutely monumental. Okay, Goldman Sachs said 5 years ago that China's property market was the largest single asset market on this planet at 62 trillion. And what's US debt? 37, 38 trillion. So how big was, not is, China's property market? China did the classic economic manoeuvre from factories, i.e. just like Japan in the 60s and 70s, factories, production, workshop of the world, like England in the 17th century, 18th century, 19th century, workshop of the world. It then had to move because it needed to expand its economy. And it moved to property. Oh, what did Japan do in the 80s? Property. What did it become? The Emperor's Palace in Tokyo was worth more than the whole island of Manhattan. at the end of the 80s. True. I remember it being printed in the FT. Doesn't mean it's true nowadays. It did in those days. The FT was solid in those days. Now it's a narrative. It's a piece of narrative toilet paper, like all the media. Narrative toilet paper. Okay, so it moved from factories to property. And now what's it doing? Well, it's desperate because its property market has completely imploded. It's completely imploded. And I'll give you the link to Eurodollar University on the Chinese property collapse because he's got more detail than I can give you. I give you macro, he gives you more of a medium-sized macro detail. And he gives you the numbers, he gives you the charts, and it's pretty frightening when you see 8% falls in the last month. Okay? So what is China trying to do now? It's trying to go from factory to property to future, just like Japan did. It's trying to go to the future, but in that future, it's competing with everyone, isn't it? Everyone's going for that future. Everyone's going for AI. Everyone's going for everything futuristic at once. Can't happen. There's not enough volume. Anyway, so what Jeff talks about is the beverage curve, which is all about employment and unemployment and the consequences of a flat beverage on China's economy. But the thing is, it's not just China's economy. It's outside of China as well. It affects the world because it was such a big part of the world's production economy. So we're going to see real structural problems that no one, Xi or whoever is now running China, doesn't matter, get the shills out there screaming Xi's still in control, doesn't matter because they can't control this. They cannot control it. Okay? They can't do anything about it because the world isn't in a position to take what they want to do. And the world, consumers, are not in a position to take everything the world wants to produce. All right? Now, all of this always goes through banking systems, okay? And this is why a lot of people don't understand how economics works, because they have no clue how banking systems work. And they have no clue the effects on the banking system until it happens, and then they all run around screaming, saying the banks are evil, banks are evil, banks are evil. But they didn't realise what was happening before it became exposed. And what I'm trying to do today is expose it. I'll go on to number 3, which is the repo rate. Now this is Jeff Schneider, but I'm also going to link Stoic Finance, just to show you that it's not just Jeff who's saying it. Stoic Finance, never seen them before, picked them up last night, had a good look and thought, well, this guy's solid. Same issue, US repo market exploded on Friday, exploded. It went up to 50 billion of repos in one day. We massive things. And the thing is, and I think Stoic Finance said this, he said, it's not able to be controlled. You cannot control this. You can come out, you can make public statements, you can talk about what action you might wish to take. It's all narrative. Everything they say is narrative. It's like Bernanke at the height of the subprime crisis. Do you remember? He said, oh, don't worry, subprime will be no more than a 50 billion problem. 3.4 trillion later. Did he ever admit he was wrong? No. Does he still do public speeches? Yes. Does he still get paid $500,000 per speech? Yes. He was wrong by a factor of 68. He said no more than a 50 billion problem, and it was 3.4 trillion. I said 3 trillion at the time, so even I underestimated it by a good 11-12%. I underestimated it, and I thought I was being pretty bold to say 3 trillion. It was 3.4 trillion. Bernanke, 50 billion. They do not tell you the truth. Full stop. End. Dot. Period. You get narrative or lies. Narrative's the polite word. Lies is the truth. Okay? You get lies because they don't think you can cope with the truth. It's not that at all. They don't even know the truth. This is out of control. China's economy, China's property collapse is out of control. The problem with China, though, and why it's going to affect the whole of the world, is that they can't do anything about it, but they think they can. And they cannot risk unemployment. And this is the difference. Whereas America can be quite brutal in a recession and unemployment can rise quite rapidly, China cannot accept unemployment, systemic unemployment. It cannot accept it. But how does it go from a factory economy to a failed, drastically, property economy, to a future economy which needs nowhere near the same amount of jobs? How can it do that and keep employment or keep the people happy? It can't. It can't do it. So the effects on the rest of the world are going to be colossal. Now, let's just turn over the page. Oh, there's another link here to the FT, and it's called preemptive bank bailouts. And there's a chart here on the bank losses in the US. At this time, the banks are carrying 528 billion of bond losses. Did you know that? Have you been told that? You have. I've told you twice before, actually. They're carrying 528 billion of losses before the obvious now recession, depression sweeps across the world. So, okay. So what does it mean? What do we do? Well, it's the same as ever. People will want dollar-priced assets, but not the dollar. Okay, they won't want dollar treasuries. They won't want dollar bills. But funny enough, the dollar will become the crisis currency, and they will want a dollar-based priced asset. So where do we come back to? You know where we come back to. We come back to gold and silver, essentially. Okay, we come back to gold and silver. Now, I'm going to link all these pieces to you today. And I know it's incredibly difficult sometimes to read them, and they're all, say, 15, 20 minutes, so you're talking an hour, hour and a quarter. But if you want to understand this crisis, you need to watch those links. If you don't want to understand it, but you want me to tell you what it means, then obviously just have a brief look at them. Just get the flavour, just get the feeling, because you need to get the feeling. Otherwise, I can look as passionate as I want about this, and it won't mean anything to you because you haven't got the basics behind it. The basics are that this world now has got a monumental demand, supply, geopolitical, political, economic, everything problem. And that leads to currency crisis. Now, then we go to where could crypto fit in? And I've given you it before. I gave you the Japanese exit video, Jake Claver talking about how they may bridge the repayment or the Japanese carry trade being unwound. You need to watch that one. You need to watch it. Doesn't mean it'll happen. Just means the odds of it happening, the probability is increasing daily. And the yen weakening, like it has now, is increasing the odds of that happening. Okay, because the amount of yen out there is just, well, within Japan, really, is just stunning if you looked at the numbers. So we've got this all happening, and I'm giving it to you all in one show. We'll try and break it down during the week if I get a chance, but so much is happening now. Look at those two numbers. Look at the Chinese property collapse. Look at the repo rate. And third number, look at how much the banks are carrying in losses, please. And I'll come back tomorrow and we'll see what else we've got. Thank you very much indeed.